welcome to this short video. Today I will be looking at what legal steps you should take if you are contemplating selling your business, and this will mostly apply to owner-managers of small to medium-sized businesses. So the first point is to work out what it is you're actually selling. So if, as most businesses are, run through a limited company, you need to decide whether you are selling shares in the company or whether you're just selling the assets. If you're selling the shares in the company, bear in mind that means that the purchaser of the company is going to take over not only the assets but also the liabilities. This may make the transaction more complicated because the buyer is undoubtedly going to carry out a high level of due diligence and is going to require extensive warranties and indemnities from the owners and shareholders of the existing company. So tax considerations are very important in how you structure the transaction, and before you even put the company on the market for sale, you should take tax advice from your tax advisor or from your accountant. There is a valuable relief that is available on a sale, which is business asset disposal relief, formerly called entrepreneur relief, which will reduce the capital gain that you have to pay as a shareholder to 10%, which is obviously a very favourable rate, but you need to ensure that the sale is structured in such a way that you will qualify for this relief. Consider whether you are willing, instead of taking the sale price up front completely, and we all know that cash is king, but you may be able to achieve a higher price if you are willing to defer receiving part of the purchase price over a period of time, maybe 2 years, during which time you may agree to remain as a consultant or an employee of the company to ensure that its customers are handed over and that the buyer obtains the highest possible level of profits. Again, you need to identify early on what are the assets that you're selling. Now, typically with most SMEs, you will be selling your lease, if you have a lease, the goodwill of the business, the trade items, fixtures and fittings, and that sort of thing. However, consider there may be a valuable freehold or long leasehold asset which doesn't need to be sold because the value of your business is based upon the turnover or the profitability, not necessarily the value of land. Therefore, consider whether you want to hive off certain valuable assets and exclude them from the sale. Be careful with employees because under the TUPE regulations, their employment rights will be transferred to the buyer. So you need to be cautious if the buyer is trying to get you maybe to reduce the workforce, because this could potentially end you up in a claim for unfair dismissal. And finally, consider if you're willing to give certain restrictive covenants or restrictions whereby you agree that you will not set up a competing business within a certain radius of the company's premises for a certain period of time. You agree that you won't solicit any customers of the business or any key members of staff. So the key really to selling your business as quickly as possible is preparation. If we at Anthony Gold can assist you, please do not hesitate to contact me or any other member of our commercial team. Thank you.